Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday and it is the 28th of February. My name is Russell Shaw and I'm a senior market specialist at FXCM. Just going to go ahead and bring up our disclaimers. And we'll start off with the high risk investment warning. Keep this on screen for a few moments. You can just have a read through that. And then we'll bring up the market commentaries disclaimer. Just another few seconds. All right, let's bring up the market commentaries disclaimer. All right, excellent. Excellent. Let's get the real rate on screen. Okay, this is the real rate on the top. We've got the US dollar at the bottom. So what we're looking for, just to reiterate, hey Anna, good morning to you and welcome. Hey Raj, good morning to you. What we're trying to basically um, assess here is if we're having a turning point, if we're getting a turning point in the real rate and in the US dollar. And you can see that we've got a potential reference candle here on the on last week's candle for the real rate, and a potential reference candle on the dollar from 2 weeks back, right? But the idea here is we're not getting conditions 2 and 3 so much. In fact, yesterday well, this is the weekly. Let's just go through to the daily here, and you can see that yesterday the daily real rate moved up, and then you can see that we're getting the dollar starting to follow the real rate up as well. So um, we're just not getting the reversals in just yet. We'll carry on watching. I mean, the data that came out yesterday, I didn't feel was particularly strong. We saw core durable goods coming in lower than expected. The conference board's consumer confidence coming in lower than anticipated, but um, the dollar in of itself much stronger than what I thought it would be. If we take a look, hey Kim, good morning to you. If we take a look at the US dollar hourly, so just sort of a debrief after yesterday's um, live stream. So if we just go ahead, so this is the US dollar. And what we saw yesterday is we saw that the dollar was actually the EMAs were coming down. That's what we saw in yesterday's webinar. We saw that the stochastic was coming down as well. And what we said is, look, there is this underlying support. There's this underlying support that is something that the dollar is going to have to contend with. Now, what subsequently happened is that the stochastic hit that lower quintile, but it didn't hold. You see, the whole thing is about whether it hits the lower or the upper quintile and holds, because we want the momentum to build. But it kind of just sort of slipped in and then boom, moved out. And at the same time, we saw that the support for the US dollar held. So we didn't get a swing. In fact, then we got a movement up against what we were anticipating yesterday. So the real rate moving up, and really the US dollar, the US dollar starting to move up with it. It wasn't until sort of deep into the Asian session that we really saw the dollar starting to move up. Um, let's just go through to the dollar daily chart just to see how it's looking with our zone. So give me a moment. I'm going to just bring that up. All right, here it comes. So this would be the US dollar on the daily. So yesterday we saw that I just want to zoom in here. Yesterday we saw that it was potentially going to slip from zone 2 into zone 3. Lo and behold, that's not what happened. In fact, we had the dollar maintaining in zone 2. So how do we read this? Well, I think that the movement from zone 1 into zone 2, that's the relative weakness there, but it's holding in zone 2. It's not slipping, and then we've had a quite a strong movement in the dollar. So we're really in kind of this no man's land, and it's playing sort of havoc with the analysis. And you can see that the RSI's uh, moved up. Um, so we're kind of oscillating around that 50 line at the moment. Not great. Not great for trading at the moment because the actual swings and the trends much more difficult to really pick out. Let's just take a look what happened on euro and pound as well. So we were looking for euro to show some sort of strength. We're looking for pound to show some strength yesterday. Is that in fact what we got? So we'll just go down to the hourly and just do a debrief there. So let's go ahead, bring up euro US dollar first. All right, so this is euro US dollar. Now, what we were doing is we were looking potentially for a movement up in towards this resistance level. We drew this resistance, and we were looking for the stochastic to head into the upper quintile. Never happened. It hit the resistance and it slipped. It hit the resistance and then it slipped. And we've gone all the way back into the lower quintile. Let's just try get a directional bead here with the daily chart on euro. So let's go ahead and bring that up. Okay, so this is interesting. This is very, very interesting. We are in zone 1. Okay, we are in zone 1, and we do have some red. And we're testing the border between zone 1 and zone 2. If it slips into zone 2, of course, that's relative weakness, and that would be the dollar potentially um, strengthening further. But the fact that we have the euro in zone 1 and the fact that we have the RSI above 50, well, that immediately suggests perhaps a dip in the uptrend. And if we've got this dip in the uptrend, let's just go back to the hourly chart and see what we need to happen for that to play out. Okay, let's get rid of the drawings. So we'll remove the drawings. And what we can do is put a support level in round about here. Okay, let's make that a bit easier on the eye to see. Okay, I'm just going to change this border through to that. Okay, so we've got this support level that the euros come down to. Now, remember, we are in zone 1 on the daily chart. if we're in zone one in the daily chart, what we effectively need to happen here. Now, don't predict. We've got to react because we're in quite a fragile situation here. The situation is that the stochastic is in the lower quintile. If it carries on in the lower quintile, then we're going to break through the support. And then what's going to happen on the okay, cheers, Raj. We'll see you tomorrow. So what's going to happen effectively is that if we break through the support, then on the daily chart, we break from zone one to zone two, we get that relative weakness. But we're not there yet, so we're looking for that dip in the uptrend. So if we're getting that dip in the uptrend, let's see if we can get a support going in here, and then we want to get a positive cross here. So we want to get the green EMA crossing above the orange EMA, and then developing that angle and separation to the upside. That would be trigger one. And then we would also need to see the stochastic push upwards. So this is very much sort of conjecture. Okay. Well, let's just understand the basis for the analysis. The basis for the analysis is that we're in a zone one on the daily. There's red, but we're still in zone one. So we're suggesting that there's potentially a dip in the uptrend. Is there going to be a dip in the uptrend? I don't know. If there is going to be a dip in the uptrend, then what I need is to get the EMAs to cross positively, and I need the stochastic to cross positively. And if that happens, we would need the stochastic to make its way up towards the upper quintile and hold. If we get that, then we would probably get a really decent dip in the uptrend type of scenario. We're going to have to debrief on this tomorrow to see if that's the way it's going to play out. Very, very tough situation. Risk management, stop losses, money management, right? Let's go through to cable, see how cable behaved following our analysis yesterday, and see if there's any sort of clues to what could possibly happen today. So just going through to the cable daily chart. Okay, just bringing that up. I'm just going to go and mute for a few moments. I could just feel like coughs coming. I'm begging your pardon. All right, I beg your pardon. All right, sorry about that. All right, now this is, again, we're in zone one. It looks as if it's challenging to go into zone two. So we're potentially getting that relative weakness, okay, which is similar to what's happening on the euro. Again, if that support doesn't hold on the, sorry, let me just share it. So here we are in zone one and potentially dropping into zone two. So very similar to the euro daily. If the support doesn't hold on that euro, then we'll slip into zone two on the cable as well, and we want to see if that's going to hold. So we want to see if there's this dip in the uptrend scenario here as well. The RSI still holding above 50, where again, I want to stress in a very fragile session because it looks like it might be tending to drop from zone one into zone two. Let's just go down to the cable hourly chart, see what the short-term signals are there. So bear with me. I'm just going to bring that up for you. All right, here it comes. This is cable. This is on the hourly. All right, let's get rid of the draw. Now, let's put in the support area, which is right here. So we've got the support area that the currency is contending with. We do have, if I zoom in here, we do have what we call a dragonfly doji. A dragonfly doji does suggest bullishness. In other words, there is a selling tail, a buying tail, and there is potentially some support coming for the cable pairing. If there is going to be a dip in the uptrend here, what we need is we need the EMAs to cross positively here. We want to see the 5 above the orange 10 hour. We'd love to see the stochastic cross positive as well. And once it crosses positive, I would very much want it to move to that upper quintile and hold in the upper quintile, right? So there does look to see we've got this gravestone, beg your pardon, this dragonfly doji, okay, which bullish doji, perhaps even a sort of a hammer, could call it a hammer. So there does seem to be a potential dip in the uptrend here. It all now hinges on the signals manifesting. I don't want to predict, I want to react. So let's just keep an eye on that. One part of our analysis which did seem to play out adequately was the DAX. Let's just take a look at the DAX. All right, so this was DAX, and you can see we had a really nice movement up yesterday, a really good swing. And what it's actually done is pushed the daily chart into an overbought. So we just got to be careful here with the DAX in that it is getting quite frothy, and we're seeing that the risk markets are getting quite heated. I think that there's going to be profit taking soon because there's been some good money that's been made on the stock market. I think that portfolio managers bank those and then buy in again at a lower price. Let's just take a look at what's happening to the DAX on the hourly chart. Okay, we really had a terrific move on the stock markets yesterday. So here's the DAX, and you can see that we did get the positive crossover. We did get the positive crossover on stochastic. It goes into that upper quintile and holds, and that's really the swing, isn't it? So that behaved really nicely. The issue, of course, is that it's getting quite it's looking like it's getting quite choppy on the daily chart. We've got that overbought condition. So just be very careful there. You're going to have to be extra strict with your risk management because that overbought condition will normalize at some stage. There is, just as we head towards the cash open, there does seem to be some bullish interest. Just as we begin the day. What I can say is the longer that we stay in the upper quintile here, the stronger the underlying momentum and the more support the underlying momentum will give the index. If it drops, if it starts dropping out of the upper quintile, then of course that would be a sign that perhaps the momentum is running out and perhaps that overbought condition is starting to take shape and manifest and just weigh on the index. Okay, but just keep an eye on the stochastic here. If it stays above 80, that would be price supportive. If it dips below 80, probably some sort of profit taking coming in, given the overbought condition. Now, the markets here are not easy to read because we're kind of getting ambiguous type of readings. It looks as if money is flowing into the dollar, and it looks as if money is flowing into the stock markets. That is ambiguous because stock market is risk and dollar is risk off, right? But I think that if the dollar continues to show strength, and given the fact that the stock markets are showing some sort of overbought condition, that could weigh on risk sentiment. So just be very aware of that. Okay, that is where we'll end it for this morning. I hope that you found the live stream useful. If you did, just go ahead and click on that rocket ship. If you only if you enjoyed it, of course. What I'll say is we'll do it all again tomorrow morning, and we'll see if the dip in the uptrend on the euro and the pound do manifest. Remember, it's better to react here than to predict. If there's any comments, go ahead and type those in. All right. And guys, thank you very much for joining me this morning. Look forward to speaking with you tomorrow morning. Thanks, guys.